Good morning, traders. It is Monday, January 7th. Taking a look at the morning charts. Here we're going to start off with the SP 500 and the market breadth. And more or less, what I like to look at here on this little table is simply the NYSE advancing and declining shares. Now you can see we had on Friday strong advancing shares. And if we just quickly pull up the actual chart of the SP 500, if you divide those numbers into each other, you can see there's about 4 buyers to every 1 seller. Now if I just zoom in on this chart, I've got a blue line across here. That's the 3 level. Whenever we see buyers over 3, then I usually consider the market to be overbought. Anything over pink is usually, that's the 9 level. That's considered a pretty strong surge that usually can trigger a continuation of a trend or a reversal. And we had a very strong move there, a bounce off the Monday lows of the previous week, kind of really kick-starting things. And overall, it looks as though the uptrend has started back up again. Now, just taking a quick look back at these tables, another key point I like to look at are the new highs versus the new lows on both the NYSE and the Nasdaq. When the new highs are over 100, that's a fairly bullish sign, and of course, new lows are very low. That's also a very bullish sign. Now these numbers typically we want to see over 100. We'd like to see them over 200 and up into the 300 zone, indicating it's a very broad market rally and that there's a lot of stocks pushing to new highs. Money is flowing into the market. So we're starting to see that now. So it is showing that there is some pretty good money moving into the market and they're not afraid to buy stocks at new highs. Another table I want to look at here that's a little bit more of the short-term momentum is simply this bar chart momentum index. I consider anything over the 101 to be overbought. We were close to it yesterday. Of course, last week we had a big push up into that overbought territory, and it continued to grind higher again into Friday at the close. Anything below the 99, I consider the market short-term oversold, and usually the next day we see some type of a bounce. So where we stand now is simply the market had a strong run up last week, continued to push higher into Friday's close, and it's starting to look like it could be a little bit overdone to the upside, and that we could get a minor pullback in the equities market here. Looking at stocks trading above their 20-day moving average, this is a pretty important chart that I follow very closely, and anything trading over the 75 level, you have to start to be aware that a market top it could be in place, and usually corrections from there last anywhere from a couple weeks to even a couple months. And you can see we had a huge gap up there, and now we're trading up at the 87.97 level. So we're way up here in these lofty prices, telling us that every stock is pretty much moved up. There really aren't any losers. Everybody's kind of piled in and is buying new highs. When everybody's doing that, you got to be very aware that when the crowd is all going one way, usually it's going to go the opposite way anytime soon and kind of burn all those people and flush the market out. And eventually, I think we're going to get a pretty good pullback here. It may just be a 1 or 3 day pullback, but we're looking for anywhere from a 2 to 3% dip in the market, giving back at least half of last week's gains. Another one just to look at here is stocks trading over the 50-day moving average. And this one, again, is getting up into the lofty area over the 75 mark. And you can see it's just continued to run and grind higher. We're up at a pretty significant high. And again, when all the stocks are trading up and in a strong trend, usually it's a sign that we're going to see some type of pause or minor correction at least. Taking a look at the charts, let's just jump to the SP 500. Here's the SP 500 daily chart, the SPY ETF, and you can see we've had a nice, we bottomed out here in June, kind of a choppy start as the bulls and bears kind of struggled, eventually broke out and continued to run, formed a little flag, and continued to extend to the upside with QE3, which eventually we saw a pretty strong pullback, and now we're starting to put a bottom in here with the Christmas rally, and last week we had a strong bounce back up with the fiscal cliff news. Now overall, if we just look at this pattern, it's starting to look fairly bullish. We've got more or less a correction. We've come up, we've broken this high on the SP 500. We've had a nice pullback, of course. with the fiscal cliff news looming, it was a nice spot to get long, but we could have seen it come right back down to these lows, depending on the type of news that we got. Of course, ended up being bullish news. We saw prices jump and gap higher and continue to run. We are coming right up into this resistance zone, and we could see the SP 500 pull back, fill maybe this gap, and chop around here for a little bit, and it's building more or less a basing pattern, which it could continue to move higher in the long run. So what we're looking for is simply a minor pullback, and there's about 2% drop just to the 20-day moving average, and that would fill most of the gap, and that would kind of reload and give us a setup to get long. But right now we're buying at a 2% premium, in my opinion. Looking at the intraday chart, futures, you can see where we're trading this morning. Actually, I'll just pull up the one with the 20-day moving average overlaid on it. You can see here we have the 20-day moving average moving down. Eventually we saw it reverse to the upside. Now generally you will see the market come close to the 20-day moving average. Sometimes you'll see it actually go below it. More or less, as long as the 20-day moving average is trending up, you're still in a relatively strong uptrend. And whenever you get more or less around the 2% mark above the 20-day moving average, you've got to be aware that likely going to see some type of pullback. And of course, we're buying at a premium way up here. We'd like to see it pull back somewhere down to the 20-day moving average, or possibly even dip back down into this zone, which would give us a good opportunity to get long. But of course, that news last week really sent prices jumping higher, and of course the big gap forces everybody to chase it right up near a top, and they'll pile in, and then of course you usually see some type of pullback that shakes them all back out again, simply because they were usually getting greedy, trying to just chase the move, and usually you end up paying the price in the end when the market shakes you back out. So taking a look, let's go back to the US dollar index here. Here's the US dollar index. We'll show you where we stand. Overall, this is the 4-hour chart. It's going back November, December. It looks as though the US dollar index could be starting to form a little bit of a bottoming pattern. We had a nice sell-off here, put in a strong bottom, and we've seen a nice rally to the upside. It looks as though we could be we're threatening to break above these highs, which we have broken. It's starting to form a little bit of a bull flag here, which is bullish, forming more or less a cup and handle. And this measured move, you just take this surge up, and depending how this flag plays out, continued move up will bring us back up into this resistance zone. Now if we just zoom out a little bit, you can see where the price traded up there previously. So seeing that move eventually push back up in there is a simple measured move of this previous flag, and you take that flag, you move it to the upside. So it looks as though there is potential for another strong wave up in the US dollar index, which would put pressure on equities and commodities, which would send the VIX higher in our favor as we are long the VIX. Taking a look at commodities, let me just pull up the chart of crude oil here. Here's the crude oil chart. This is a 4-hour chart. You can see we had this basing pattern starting to form. Eventually it couldn't close above. It broke down, started to form another type of bottoming pattern, very sloppy one, and it's starting to rise. And now we're coming back up to test this key level, which this could be a nice big forming pattern, basing pattern. Overall, there's a lot of trading that went on through here, so it could take a little bit for this volume to eat through it and take a run up to the 96 area. If we drop down to the 30-minute chart, you can see a short-term pattern though. Coming down to the 30-minute chart, this is a somewhat bullish pattern, and more or less we see the market correct. You kind of got a 1, 2, 3 wave correction. We had a nice strong push up, and now we're seeing a nice light volume flag down. You could almost say it's a inverse head and shoulders forming. This light volume on this pullback is very bullish, and of course this is kind of forming a mini pattern here that if it breaks to the upside, we would probably see it come right back up and quickly test this previous high right up here, and if it has some legs behind it, it would move all the way up to the 96 area. So overall this pattern is looking pretty imminent that it's actually going to move higher. Looks as though today it could actually test this resistance zone once again. If it breaks that, it will test this previous high at the 93, around 85 area. Looking at natural gas, Here's the natural gas chart. We had that with the fiscal cliff news, huge spike down in natural gas, caused some short-term weakness, shook us out of a play, and it slowly drifted right back up. It's testing up underneath this resistance zone now. Again, if we just were to draw a line across through the average here, we're going to have some pretty heavy volume, high volume resistance, and that's where it's drifted up to now. It also happens to fall where our trend lines are, so it's stuck under that level at this time, and we could see further weakness. More or less, this was a sharp breakdown on news. A lot of times you do get a test of that breakdown. That's where we are now. The question is natural gas going to continue to extend its weakness, or is it going to try and build more of a base here? And that was just more or less a news related shakeout, and eventually break out to the upside and start to hit the upper targets that we were looking for previously. Looking at gold, here's the 4-hour chart of gold, seeing a little bit of weakness this morning. This is a pretty long-term chart going back from October till now. You can see the upper resistance red dotted line that we had. We got this lower support zone from way back in the chart. If we just go back here, the breakout zone, you can see we've come all the way back down to this level. We touched it, had a strong bounce, and now we're starting to drift back down. This could take some time to bottom out. We may see gold put a bottom, another bottom, could put some pressure down here and even squeeze to new lows. Eventually we should see some type of pop, and there will be a key more or less resistance zone across here. If it can form a basing pattern, and it may form a flag here and eventually break out to the upside and start a new rally up. But overall the trend is still down, and it continues to be under pressure each week. Looking at silver, silver's pretty much in the same pattern. You can see it hit key resistance, came down, traded no man's land here for several months. Not a spot you really want to get involved when it's trading in the middle of a very large range. You want it to get to either an extreme top or bottom before you start to look for a position, or else it's more or less a 50-50 bet. And you can see here we've come down, pierced these the support lows, and we're under pressure again this morning. Overall, we'll see how it holds up, but again, if we have the strong dollar, which looks as though it's building a bull flag to move higher, it will continue to put pressure on precious metals. Taking a look at gold miners. Gold miners, we had that strong run, started to form a nice tight bull flag, came into a support zone. We had a nice pop off that level. We did end up seeing a lot of breakdown, and it's continued to sell off, really shaking the market out. It is coming down into a key support zone. We're riding this down trend line again, but this time we're on top of it, this red trend line. We'll see if it can build a base and start to go higher, but again, overall it's fairly clear here. The overall trend is still down, and we're still making lower highs and lower lows each week. So until we see some type of bottoming pattern and momentum kind of shifting to the upside, we're not really looking to get long gold unless we get a very strong dip down into a key support zone, say down into here, which is a long ways down still. It may be an opportunity to pick a bottom for a quick spike back up, and then eventually wait for a basing pattern to form before actually taking a full long position in miner stocks. Looking at silver miners, SIL ETF. This pattern is not as strong looking. We had a nice tight flag here, a nice run up and flag. We had a very strong move down. Now it's flagging with a bear flag. This pattern actually looks as though it could head all the way back down to the 20 level, which again is this breakdown zone right here. We eventually had a breakdown, hit its head, became resistance, came back down, broke through it, tested that breakout level, and took off. So this pattern here for silver miners is pointing to lower prices, and if silver miners go down, we're likely going to see gold miners go down. So I'm not looking to try and get long miners or gold just yet. Looking at bonds, here's the bond chart. Let me just zoom out a little bit more. Here we're having a little bit of a bounce the past session. It's starting to look like it could be trying to put in a little bit of a bull flag here. It's got some strong volume. You can see here we got some strong volume, nice move up, little bull flag, and overall it looks as though it wants to come up and test this previous resistance zone with a measured move somewhere in here. So if bonds move up, we're probably going to see equities and metals pull back a little bit. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.